Hey everybody, how's it going? It's Ahmet with Down to Trade. It's Friday, May 27th, 2022. So I decided not to trade yesterday, not because of any particular reason having to do with the market or anything, but because I just was profitable Monday, Tuesday, and Wednesday this week, and I just wanted to enjoy the day. You may be saying, but Ahmet, I thought you picked the best 3 days to trade during the week and then you're done. And yes, while that is generally true, often I will take advantage of market sentiment and trade an extra day. That said, I did see some opportunities this morning and decided to jump in, but we'll get into the trades in just a second. For now, I want to talk about trading psychology, what it is and why do we care. In order to properly talk about trading psychology, I'm going to have to tell you a quick story about a trader named Joe. Joe was a decently intelligent young man, hardworking, but he felt he wanted something more out of life. You could say he was just a normal Joe, kind of stuck in the grind, and was feeling very gloomy about the idea of being stuck in the rat race. He heard from a few coworkers about friends and family who made money trading stocks and cryptocurrencies. This intrigued Joe, but he didn't know anything about stocks. So Joe began his YouTube journey into the world of trading. At first, he felt somewhat overwhelmed by all the new lingo he had to learn, like going short, covering your position, bears, bulls, limit, buy, stop order. It seemed like a lot for him to learn. But Joe pressed on and continued to watch video after video. He even picked up a book on day trading. Things were starting to click in his mind. He was sort of getting it. He was understanding what the videos were talking about now. And then it happened. Joe stumbled upon a trading strategy video that made sense to him. The teacher in the video made it look so easy. All Joe had to do was watch out for when the 8 EMA crossed over the 21 EMA and he would take a position. Joe even learned where to set up his stops and take profits. Easy peasy. As Joe opened an account with a brokerage and was waiting for the funds to transfer into the new account, he began to picture his life a little differently. He pictured in his mind how he was going to quit his job. He thought about the new car he was going to get, how this would greatly impact his love life. Joe was making plans and he couldn't wait to get started. So the day came. He had a list of stocks he was going to watch and he waited for their signal. It didn't take long and boom, he got into the trade. He wanted to be smart about it, so he went in with a small position size. Shortly after, his take profit was triggered and dopamine rushed through his blood in a moment of sheer joy and excitement. He did this several more times over the span of the week, with a few losing trades but mostly winners. He was astonished how easy it was to make money, but it wasn't enough money. Joe needed to go in with a much bigger position size. So on Monday morning of the following week, he waited for his signal, and boom, he was in. He was so excited about how much money he was going to make this time because he went in with such a bigger position. And he was stopped out. Joe had been stopped out of positions before, but this one was a little different. This one hurt. Because he entered the trade with a much larger position size, he was risking more than he was the week before. And so now Joe had lost more in one trade than he made in the entire first week of trading. Joe was in the red. He felt a rush, but it wasn't a good rush. This rush was more in his stomach, more in his gut. Joe decided to pick himself up, dust himself off, and press on. With the large loss looming over his head, he was more aware of the market and his entry. He looked and looked for an entry signal and suddenly found one. Joe knew he wanted to get back into the profit he had earlier. So he got into a position with the same large position size and he lost. Joe was devastated. He was down big time now. He tried one more time. Joe got into the position again with the same position size. He realized that the rush in his stomach was not popping up the moment he entered the trade. He thought that was weird, but whatever. Joe watched as the chart was moving in his direction and he decided to take profit in order to capture the gains he just made. Boom. Joe made a profit, but it was a small win. It wasn't enough to get him out of the red. So Joe did what any intelligent trader would do in a moment like this. He searched YouTube for a reason as to why he was losing money. He was determined to find the answer. After all, his 821 EMA cross just failed him. And then it happened. Joe found another course that said he should use a 1020 EMA cross. That's it. Joe was using the right strategy. He just was using the wrong signals. Joe just needed to use the 1020 EMA cross and surely he'd make some money. I mean, the teacher in the YouTube channel made it look so easy. So Joe did exactly that. He started off the exact same way with the small positions and made some profit. But then he increased his position size and lost even more. Joe then returned to YouTube where he found Bollinger Bands. These seemed like the holy grail to Joe, but the same thing ended up happening. And the cycle repeated for a while. Joe did learn a lot of different strategies, however, he was still losing money. Now, I've told Joe's story to several students, and I've heard so many of them tell me, Ahmet, how did you do that? You just told my exact story. I did the exact same thing. And my honest response is always the same. How do you think I know that story so well? It's because that's really my story. I'm Joe. Like so many traders, I fell into the rabbit hole of looking for the right strategy. If only I could find that one magical strategy, all of my problems would disappear. But it never happened. And what I now know is that it never could happen. This story belongs to so many traders, not just me. So why did Joe fail? What was it about his strategy that wasn't working? Well, the simple answer is it had absolutely nothing to do with the strategy. The truth that I and all successful traders eventually stumble on is that the strategy does not matter. When new traders meet me, the first question they ask me is what strategy I use. And that's how I know they're new traders. Successful traders know the secret. They know that the strategy is meaningless. What matters is how you manage the position when you're in it. I could take a successful day trader, have her pick a random strategy out of a hat, and tell her to only trade that strategy for 1 month, and she would be successful. I don't care what strategy you use. It means absolutely nothing to me. What matters to me is how well do you manage your fear in the trade? Are you so afraid when you're in the trade that you hold on to your losers too long and maybe let go of your winners too fast? Do you try to convince yourself that the losing trade has to reverse here? It just has to. This is where the story of Joe diverges. Joe is going to go down one of two paths here, to the left or the right. If he goes left, he's going to do what most traders do and quit without ever learning the great truth in trading. Joe will become a statistic, part of the 95% of traders who lose money. For years, he's going to tell people his tale of trading and try to convince everyone that nobody can make money in the stock market. Or he'll blame institutional traders for rigging the game. Joe will blame anyone and everyone for why he couldn't win, and he will have missed out on the fantastic voyage of self-discovery that every successful trader knows about. Or Joe will go down the right path and realize it wasn't the strategy that failed, it was himself. It was his fear, his greed, and ego that brought about his demise. So, which path are you on? Here at Down to Trade, we not only teach traders how to trade, anyone can do that. We teach them how to become successful, how to manage their emotions when it matters most. If you're interested in learning more about how you can take the successful path, stick around to the end of the video. You'll be glad you did. Okay, so enough about Joe. Let's get down to trading. So as you can see here, 11 minutes into the day, we entered the 40-10, 30-80 bull put spread for 50 cents. And almost 45 minutes later, our take profit was triggered for 30 cents. That's 30 cents premium capture. A little less than an hour later, we jumped into another bull put spread, this time the 40-55 by 40-25 for 50 cents again. We were in that one for almost 2 hours before the take profit was triggered for a 35-cent gain. So the gross premium capture for the day was 65 cents. And after a little over 10 cents in commissions and fees, we ended up with 1.05% return for the day, just a hair over our daily goal. So if we take a look at the entire week, we'll see that we were profitable all 4 days of trading, Monday, Tuesday, Wednesday, and today. And we ended up with a net return of just over 3.5%. Not too shabby. I'll definitely be happy with that. Okay, so let's go take a look at the charts. Okay, again, so here's our normal setup with the 1-minute SPX on the left, the 5-minute VIX in the middle, and the 5-minute E-mini future on the right. The green arrows over on the SPX are where we entered our spreads, and the red arrows are where we exited or were triggered out of our take profits. As far as entry, it was pretty simple. After considering breadth ratio and the advanced decline line, which were both hugely positive, plus taking market sentiment, VIX, and volume on the E-mini, we were sure it was going to be a trending bullish day today. And lucky us, we were correct. All right, so it's been a long video, so I'm not going to spend any more time here. I just wanted to quickly show you our charts and how we ended up for the day. Okay, everybody, I hope you got something out of this today. I hope that maybe Joe's story might have inspired you. If you'd like to learn more about the Down to Trade Room and its performance this year, take a look at this video. And for those of you who don't know yet, we're going to be opening our Down to Trade Room to the public in the next week or so. First, we'll be launching our beta room, which will be limited to 20 traders. And then we're going to be opening up the room to everybody else shortly thereafter. The best part is we're offering the trade room at a 50% discount for the first 50 subscribers, so don't miss out on this. We're also making some real fantastic courses which will cover everything you need to know, starting from the basics of trading to options and then to our phalanx option strategy. All of this is going to be absolutely free. Also, visit our website at down2trade.com, where you can submit your email address to be notified when our 50% discount pre-order promotion kicks off in the next week or so. Look for the link in the description below. And if maybe you want to take a look at how you could find the right path to success, come visit us at Down2Trade. We'd love to be a part of your story. Anyways, take care and happy trading.